Hey, welcome back to another episode of Johnscryptotherapy. Today we're going to look at the Omi token on the daily chart. So first is we're going to come to the chart. We're going to go to the higher time frame and define to us, is this trend going down or is it going up? Okay, so clearly we can see we are going lower and we are having protective highs. That means these highs are being protected each time price is making a new low. So what this basically means is until these prices are broken towards the upside, we are protected and we're only looking for one concept, and that concept is to sell. So right here, we are seeing prices going towards the downside. We have two boxes here to show us this was our first box, and what was protected on this box was the very top. So let me take away these drawings right here. And when we look at this box, what was protected was this very high. Prices did not break towards the upside, but we did break a little bit lower. As you guys can see, this broke towards the downside. So this box is valid. So basically, when we go to the next box, what is being protected is this high. That means if prices do not break above this structure, technically looking at a bigger scale, we're not really bullish as a trader. If you're taking a trade, we want to see this level of 0.0019 4-ish get broken. If that gets broken and we see a retest of confirmation, that is going to be the strongest sign that we're actually going to go a little bit higher. We are technically going lower, and even though price is going smaller and smaller to new lows, we can still see prices continuing towards the downside. A lot of people would say, hey, this is momentum change. And yes, this could be a momentum change. Reasons why we're failing to make larger lows. But keep that in mind. This is what markets do. This is how we get into the psychology of markets, because at the end of the day, if prices don't break this high, we can absolutely do one thing and one thing only, continue lower. And this could be a consolidation phase for price to continue towards the downside. So please do not get fooled on that. We want to see prices getting broken towards the upside. The cool thing here is, guys, every single time prices do break towards the downside, we do have fair value gaps. Fair value gaps are everywhere. And when you look at fair value gaps, they come back and retest this structure. When you look at this fair value gap and extend it, and what happened here, price came back twice to accept this level as rejection, and prices went towards the downside. Now when we're looking towards this level, and this is the box that we're looking at, where's our fair value gap? Guys, it's all the way over here. And what do I see? On the smaller scale, we're seeing the same box method on a smaller scale going towards the upside, but this is fractal because the overall picture still is breaking towards the downside. What we need to confirm to ourselves is this level right here needs to be broken before we get strong buying orders. But for the small scale, like a scalper, this is fine buying here and then dumping prices a little bit around this levels. If you want this price to be broken, that's a swing trade and we're going to go a little bit higher. But for the meantime, if you're a scalper, go towards the lower time frames and try to draw in your ideas. And one more thing, guys, whenever we draw this box method, we always want to see a key retracement, at least a 50 or at least roughly around the 61.8 to give us great confirmation that we're getting into a great level. Right here, as you guys can see, we did not get that confirmation yet, but where does it fall? Exactly falls towards the box and this trend line, this descending wedge. So what I'm expecting price to do is come towards these levels, fill some orders, and watch the candles itself. And once price comes to this level, and if I see that confirmational setup that I do teach in my mentorship program, I am absolutely getting into that beautiful sell and we're targeting the all-time lows. And that's going to be a great return on my investments. And from that point, I'm going to buy a little bit Omi and then we're going to go a little bit higher. This is what we're seeing on the daily. I want to show you guys a cool concept. Everything is fractal. So if you do come towards the lower time frame, this is another topic that I want to show you guys. We can use the same box method on the smaller scale. So take a look at this. Price went up towards the upside, and guess what? We have a rejection zone right here. Prices came back towards that rejection zone, and what do you think we did as traders? We bought that level. And what did price do from this point? It made a new high. So when we made a new high, what is being protected? This bottom is being protected. What did price do when it came towards this bottom? Well, we're going to draw in our zone right here. And exactly again, guys, we got into another beautiful trade towards the upside. This is how beautiful this idea is. Sometimes you'll get great trades. Sometimes you have to hold off on your trades. But the idea is we're going bigger on the smaller time frame, but on the higher time frame, we're still in this bearish structure. So I don't care if you want to buy for a short period of time. Buying for a short period of time, if you have great understanding of the structure, that is fine. But do not be fooled. Small structures cannot take out big structures until we see big structures give us candles to define to ourselves, hey, the reversal is for sure happening now. So please put this all into context. I wanted to give you a small lesson on this box, but overall, what I'm trying to do is everything is fractal, guys. So when we're looking at this swing, we're looking at the boxes going towards the downside and another box going towards the downside. These boxes, once again, are protected on the highs. Once we see the highs getting broken, that's when we start to look bullish. And for that meantime, right here around 0.0019-ish, that is going to be the box for the last movement. And when I do see this box getting broken, I don't want to jump in right away. I know there's a phase of a retracement or a pump, then a retracement. What I want to do is not FOMO into the trade. I want to wait for the right retracement. And retracements typically happen with at least a 50% retracement or a touch of the Ichimoku cloud or something of that nature. Guys, this is just trying to put everything into simplicity. Even though we're failing to make lower lows in a stronger move, does not mean that this price cannot dump even harder. So keep that in mind. Price can absolutely, even at this level, dump. Until we break this level, I repeat, do not look crazy for strong buys. If you're an investor, do whatever you got to do. But if you're a trader, this is the principle of learning how to trade. Waiting for those key levels to be broken, not by a wick, by a body. We need a confirmational body to enter those trades. Have some fun, guys. And I'm really excited to say we're almost ready to see some great moves. If you guys do like this type of topic, please make sure to like, share, and subscribe. Make sure to put this on your charts. Have some fun. And guys, we're all traders in heart. Take it easy and John out. Peace.